You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Friday. Yeah, it is. Everybody's been working for the weekend. It's 25th day of July, 2025. Thanks for joining us. Whoever you are, wherever you are, we're always glad just to have you right here, right now. We do 2 live broadcasts every trading day. The first one is our live training room. To get in there, you got to be one of our traders or taking the 1-week free trial. If you've not taken the 1-week free trial, when Michael joins us at the top of the hour, he'll walk you through step by step. Now you're thinking, well, gosh, it's Friday, I should wait till Monday so I get my 5 full days. No. Do it today. We'll get your indicators up and indicating today. You'll have the weekend to get familiar with them. And then your trial will officially start Sunday night at 6 p.m. Eastern when the markets open, and will run all the way through next week. Oh, Friday's a holiday, so you're actually going to run through Monday of the following week at 5 p.m. Eastern. Wow. I guess that makes it a really good day to take the trial, if you haven't yet. But again, when Michael joins us top of the hour, he'll walk you through it step by step. Get it done today, and gosh, what do you end up with? 5, 7, 8, or 9 day free trial? 8 days. Because of 2 weekends and a holiday, that's 5 days. So I guess if you add 5 days to 5 days, 10 days? Whoa. That's pretty awesome. In fact, it's really awesome because you don't need a credit card. It's a free trial. A lot of places say it's a free trial, but then when you get in there, well, we just need your credit card number now so that at the end of the trial, you'll automatically be rolled. No, we don't want your credit card. But you will need to follow the steps Michael shows you. And again, we'll get your indicators up and indicating today. And I think you'll find it is probably the simplest trading strategy you'll find anywhere on TradingView. So, moving on. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and then come back for this broadcast, the noon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email and it'll automatically log you into our platform. The benefit of doing it that way is you instantly have access to the question box, so you can ask questions and participate in the discussion. Now, there will be days you're out of the office, away from the desktop, maybe on vacation, but you still want to join live. Some days you'll be busy, you can't join live, but you want to get caught up later. Well, you can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. But you don't have to remember all that. Just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,800 daily episodes archived for your educational and viewing pleasure. And it's probably about time for me to check, because we may have hit 2,900. I'll let you know Monday. Okay. If you're new to our little neck of the woods, the YouTube channel is a great way to get to know who we really are. Thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to, but it is a great resource to have at your fingertips. And I'll let you know we've been around a minute. And again, you can literally see day by day how we've evolved over the years, from whence we started to where we are now. youtube.com/CFRN. And be sure to hit the subscribe button and tick that little bell. Number one, you'll be notified anytime we go live outside of our normal broadcast schedule, and it helps more people find our channel. That could be your good deed for the day. The schedule for each afternoon broadcast is right here. At the top of the hour, Michael will join us for a recap of what happened in the live training room this morning, then do a little live trading on the TradingView platform. But we'll start where we always do, with our daily devotional. We began a new topic yesterday, the solitude practice. So you're in day 2 of 4. Our scripture today, Matthew 26, verses 36 through 46. I'm going to share it with you from the Message translation. Then Jesus went with them to a garden called Gethsemane and told his disciples, "Stay here while I go over there and pray." Taking along Peter and the 2 sons of Zebedee, he plunged into an agonizing sorrow. Then he said, "This sorrow is crushing my life out. Stay here and keep vigil with me." Going a little ahead, he fell on his face praying, "My Father, if there is any way, get me out of this. But please, not what I want. You, what do you want?" When he came back to his disciples, he found them sound asleep. He said to Peter, "Can't you stick it out with me a single hour? Stay alert, be in prayer so you don't wander into temptation without even knowing you're in danger. There's a part of you that is eager, ready for anything in God. But there's another part that's as lazy as an old dog sleeping by the fire." He then left them a second time, and again he prayed, "My Father, if there is no other way than this, drinking this cup to the dregs, I'm ready. Do it your way." When he came back, he again found them sound asleep. They simply couldn't keep their eyes open. They had no idea what was about to happen, but Jesus did. Are you going to sleep and make a night of it? My time is up. The Son of Man is about to be handed over to the hands of sinners. Get up. Let's get going. My betrayer is here. Again, that was Matthew 26, verses 36 through 46 from the Message translation. So in day 2 of the solitude practice, we're going to talk about an encounter with ourself. Over the next 3 days, the plan is to cover the 3 primary encounters we must face in solitude. Now, we talked yesterday in depth about what solitude is, and it's not a bad thing. An encounter with ourself, an encounter with our enemy, and an encounter with our God. First up, an encounter with ourself. When you go into solitude, rather than feeling happy or at peace, the first thing that often happens is what Father Thomas Keating called the unloading of the unconscious, which is a way of saying whatever is down in you comes up from the substrata to the surface of your heart. Let me name a few of the most common feelings that come up in solitude. First, exhaustion. It's like our body has been running on adrenaline and all of a sudden, it just goes out. Second is fear. My mind can't stop racing, and I find myself less praying and more worrying in God's general direction. Third, sadness. You begin to feel sadness well up inside of you. It's like your soul tells you what you need to grieve. Fourth, anger. All your hurts come up, and you feel mad or bitter. And finally, shame. In solitude, there's nowhere to hide. And we often feel a profound sense of just how broken and in need of salvation we are. And you know, that's where God does his best work, in the broken places. One word for all these feelings is pain. In solitude, we encounter our pain. And when we go into solitude, what is down comes up. And to get free of it, we have to face it. How do we do this? As always, we apprentice under Jesus. Matthew 26 describes the scene just a few hours before Jesus' betrayal, arrest, illegal trial, torture, and murder. Jesus knows what's coming. And we read that Jesus goes to the Garden of Gethsemane to pray, and that he began to be sorrowful and troubled. Jesus goes to the place of pain. And he doesn't distract himself from his pain. He meets God in his pain. How? He follows 3 movements of the soul. Number 1, he gives God his feelings. My soul is overwhelmed with sorrow to the point of death. He just tells the Father how he feels. No filter, no edit, just his raw, uncut self laid bare before God. Number 2, he gives God his desires. Father, if it is possible, may this cup be taken from me. Again, no filter. He's just offering his desires to God. And number 3, he gives God his trust. Yet not as I will, but as you will. Comes to the place of surrender. This is the pattern laid down by Jesus for his apprentices to follow. Go into solitude. Get away from the noise and distraction of ordinary life. Let yourself feel. Let whatever is in you come up. Whatever it is, let yourself feel it. Don't run away to your distraction of choice. Stay with the pain. Follow it all the way down to God. For us as followers of Jesus, once we notice and name our inner life, then we can offer our feelings up to God for our transformation. How? By following the same 3 movements as Jesus. First, give your feelings to God. Second, give your desires to God. And then, most important, give your trust to God. This is the pattern. Go to the place of pain and meet God there. Many people fear the quiet. They are terrified of what's under the surface and what may come up in solitude. But to quote Jesus' often repeated command, do not be afraid. In fact, that phrase is the most Old Testament, New Testament, it's the most repeated phrase in the entire Bible. Sometimes it's do not be afraid, sometimes it's fear not, but it means the same thing. What you find waiting for you deep in the dark of your soul is love. The Jesus of the Trinity is there waiting to welcome you, love you, heal you, burn you clean, and set you free. In solitude, we experience being totally exposed, totally seen, totally known, and completely forgiven, accepted, and loved by God just as we are. So do not be afraid. Jesus is waiting for you in the quiet. And if you missed yesterday, day 1 of this topic, I really encourage you to listen to it so that you understand solitude and the quiet place. We saw many times in the New Testament where Jesus would pull away from the crowds, pull away from the disciples, and go to that quiet place of solitude. He didn't go there to listen to some jams on his iPhone or listen to some podcast. He didn't go play cards with his friends or watch the latest thing on Netflix. See, there's so many distractions in the world today. Finding the quiet place, finding solitude, it's probably a lot more difficult today than it was back then. But you still need to do it. Let's pray. Lord Jesus, in the Garden of Gethsemane, you showed us what it means to surrender fully to the Father's will. Even in sorrow and weariness, you remained faithful. help us to watch and pray, not fall into temptation, and to trust God's plan even when it's hard to understand. Give us the strength to say, not my will, but yours be done. It's in your holy name we pray. And everybody said, amen. Amen, and happy Friday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. The Dow's up 84 points. NASDAQ's up 74. Russell 2000 is up 19. Oh, I'm sorry. S&P 500 is up 19. The Russell 2000 is down 3.5. Yesterday, we wondered if the other indices were going to follow the Russell. And they did, and then they didn't. So it's been kind of an unusual week, and it is typical when we're at all-time historic highs. I mean, everybody wants the market to go higher, but like Jerome Powell, they're afraid to put any skin in the game or much skin in the game. In the commodity basket, crude oil down 70 cents, trading 65.32 last. That's a drop of a little over 1%. Gold is down $44.30, trading 33.2920 last. That's a drop of over 1.25%. And silver is down 98 cents, trading 38.23 last. That's a drop of 2.5%, or roughly $5,000 per contract traded. Now don't forget, last week we had a 2-day period where silver was up $15,000 per contract traded. This week we're experiencing the retracement that comes from every big move. In the Asian markets at the close. Now, 2 days ago, the Nikkei gained 1,300 points. Yesterday, the Nikkei gained 600 points. And here's the retracement. The Nikkei is down 370 points, so probably still more to come. That's a drop of almost 1%. Shanghai down 12. The Hang Seng down 278 points, which is a little over 1%. And in the European markets at the close, FTSE down 18, the DAX down 78, the CAC up 16. So it was a red day in Asia, a mixed day for the UK, and at the moment it's a mixed Radio Friday here in the US of A, but only because the Russell is down just over 2 points. The other three, the Dow, the NASDAQ, and the S&P, while there's no movers and shakers, at the moment they are all green. So we've had a series of higher highs and higher closing highs this week, the S&P and the NQ. So how we close today will be very important. I think it will set the tone for the open Sunday night at 6 p.m. Eastern. Let's take a look at the global news. Oh, and our thoughts and prayers are with the family and friends of Hulk Hogan. Pro wrestling star Hulk Hogan died of cardiac arrest yesterday at the age of 71. You gotta admit, that guy looked good for 71. the two-time World Wrestling Entertainment Hall of Famer and six-time WWE champion, was a cultural icon, elevating pro wrestling to a multi-billion-dollar industry in the 1980s. Now, I just learned this fact yesterday. Hogan was born Terry Bollea in 1953 in Augusta, Georgia. Guess who else was born in Augusta, Georgia? Actually, I was born in the ambulance between the little town I lived in, Thompson, Georgia, and the hospital in Augusta, Georgia. I was born on the move. Yeah. So, but I never knew that my whole life. I thought I knew everything there was to know about Augusta, Georgia, but I didn't know Hulk was born there. He began his wrestling career in 1977, eventually taking on the comic book-inspired alias Hulk. Hogan measured over 6 feet 7 inches, at one point weighing 320 pounds. Hogan was known for firing up crowds, cupping his ear to encourage cheering, and shredding his shirt. He headlined the first ever WrestleMania in 1985 and 7 other times, drawing tens of thousands of attendees. Hogan also starred in cartoons, a reality TV series, and movies including Rocky III and Mr. Nanny. He won a privacy lawsuit against celebrity website Gawker in 2016, and he spoke at the 2024 Republican National Convention. I'm sure most of you saw that. Did he rip his shirt? Of course he did. I got another article that we'll go over which talks about the business he left behind. Clashes between Thai and Cambodian troops erupted yesterday, escalating a long-standing border dispute that has left at least 11 dead, including an 8-year-old boy, and wounded several others. Fighting began near disputed ancient temple sites like Tamon and Previhar, probably didn't say that right, involving artillery, rocket fire, and at least one F-16 jet. Both nations closed border crossings and blamed each other for initiating the violence. Isn't it crazy what we fight over? God gave us this great, big, beautiful earth, and yeah. The U.S. fertility rate has dropped to an all-time low, with fewer than 1.6 children born per woman, according to federal data revealed yesterday. The report highlights a decline since 1957, when the rate peaked at 3.8 births per woman. Until 1971, the U.S. was among the few developed countries that consistently saw enough births to replace older generations, about 2.1 children per woman. Today's rate resembles those long seen in Western Europe. Fertility rates have been dropping worldwide. Now, you probably remember not too very long ago, China had a one-child policy. You know, the United States is slightly larger than China in landmass. We have 350 million people. They have 1.4 billion people. So they were worried about, overcrowding. Well, they didn't think it all the way through, because pretty soon they had a whole bunch of old people and no workforce. That's why they use child labor and slave labor now, because the number of adults of working age has shrunk dramatically. China has since reversed the one-child policy and now incentivizes women to have more than one child. But It's kind of like when you hit the brakes on a car. It doesn't stop immediately. If you're traveling at a high rate of speed, it keeps going for a ways. So they're going to be playing catch up for a long time. Wall Street news. President Trump today put the odds of a trade deal with the European Union at 50-50, even as negotiators from both sides have expressed optimism about reaching a deal before the August 1st deadline. I would say that we have a 50-50 chance, maybe less than that, but a 50-50 chance of making a deal with the EU. Trump told this to reporters before departing on a trip to his golf course in Scotland. He's going to do some work there too. President Trump made an unusual visit to the Federal Reserve yesterday, donning a hard hat and being led on a tour of the construction site by Federal Reserve Chairman Jerome Powell to cap weeks of mounting criticisms over the $2.5 billion renovation project. Turns out that price tag is now more like $3.1 billion. The two men also briefly sparred over the cost of the project as Trump claimed a new and higher price tag before Powell fact-checked him in real time before reporters. After Trump said that the renovation costs had ballooned further to $3.1 billion, Powell shook his head no. Trump then produced a piece of paper that Powell glanced at briefly. The central banker noted that new figure added in the renovation of a third building, the William McChesney Martin building, that was finished years ago. You just added in a third building, Powell said, standing alongside the president. It's not new. Well, Trump aides stood by the revised numbers and said that all three buildings should be included when talking about the price tag. Deputy Chief of Staff James Blair, who joined the tour, later accused Powell of splitting hairs. Is legacy media starting to tell us the truth? Wouldn't that be something? Brazil is scrambling to avert punishing 50% U.S. tariffs in a week's time. But high-level talks are stalled and U.S. companies are reluctant to confront U.S. President Donald Trump over the issue. Trump linked the tariffs, which he has said would come into effect on August 1st, to Brazil's treatment of former President Bolsonaro, who was on trial over charges of plotting a coup to stop President Luiz Inácio Lula da Silva from taking office. Lula has called the threatened duty unacceptable blackmail. No, it's just called negotiation. That's all. The United States may not have a trade deal with Canada. Trump, speaking to reporters as he left the White House for his trip to Scotland, said, "We haven't really had a lot of luck with Canada. I think Canada could be one where there's just a tariff, not really a negotiation." And as a number of newscasters pointed out last night, so what? Canada really has nothing we need. Neither does the EU, and neither does China. I mean, we'll all miss our cheap plastic crap, but everything in America is going really well. So if we don't get a deal with them, oh well. Now, I mentioned Hulk Hogan's business interest. It's been an attention-grabbing week for investors. Tesla had a far from electric quarter, while Alphabet bested expectations with impressive earnings numbers. And naturally, we had a fresh dose of Trump and Powell drama playing out on live TV at the Federal Reserve construction site. Now attention will shift to a big week coming up. Next week, we'll get earnings on tech heavyweights Microsoft and Amazon. And Fed Chair Jerome Powell will be front and center next Wednesday with a decision on interest rates, one that probably won't do much to appease the president. Lots on the docket and so little time to digest it all. So, to Hulk Hogan. Nothing suspicious. They say he died of a cardiac arrest. Now, of course, he's remembered for being quite the showman. But he's leaving behind a very lucrative business. Last week, WWE landed a lucrative 10-year, $5 billion contract to exclusively stream its flagship Raw show on Netflix. That deal began in January. Meanwhile, WWE's bread and butter live events business continues to hum as fresh storylines and stars cultivate the next generation of viewers. Couple that with TKO streamlining the WWE operations, and you get the results achieved in the most recent quarter. WWE sales and operating profits rose 23% and 38% respectively. All areas of WWE's top line increased in the quarter. And TKO is up 68 cents a share. It was the merchandising business that Hulk Hogan had, where he made an incredible amount of money. Gold extended the deadline today as the dollar rose after Donald Trump downplayed his clash with Jerome Powell, easing concerns about the central bank's independence. What do you mean independence? They're a privately owned corporation. How much more independent can you get? Gold is up more than 27% this year, but I think Wall Street's not so worried about these tariffs. Common sense is sinking in. President Trump also said his administration is thinking about removing capital gains tax on home sales to help jumpstart the sluggish housing market. The biggest beneficiaries of such a change will likely be longtime homeowners in the country's more expensive housing markets. Removing or increasing the capital gains limit, currently $250,000 for single homeowners or $500,000 for married couples, on home sales has been a long-time priority for the real estate industry, which argues that steep tax bills are keeping some homeowners who wish to relocate or downsize stuck in homes that no longer fit their needs. Take the case of a homeowner in San Francisco where home prices have more than tripled between 2000 and 2025 to a median price of about $1 million per home. A homeowner who purchased in 2000 for $300,000 might have $700,000 of gains if they sell now. Depending on their tax filing status, between $200,000 and $450,000 of those gains could be taxable at rates between 15% and 20%. Under any scenario, their tax bill would be in the tens of thousands of dollars. Those owners are getting more attention in today's market because for sale inventory is constrained in many parts of the country, pushing home prices to record highs. It's unclear exactly how much helping wealthier homeowners would enliven a sedate market. Now, just because you bought a home in 2000 and you've lived in it for 25 years does not necessarily make you a wealthier homeowner. It just means that your house has appreciated in value. You may still be living off your Social Security check. I love the way the media can twist that. Oh, it's just going to help the rich. That's the furthest thing from the truth. But I guess they got to do what they got to do. Try to stay in business. Logic 247 is our 24/7 around-the-clock E-mini alert service. Over the last 364 weeks, we've issued over 20,140, I think, individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. Valerie did the recap this morning at 7:30 a.m. Eastern. I have not issued any additional alerts today. I think 67 for the week is plenty. Of the 67 alerts we've issued this week, since the markets opened Sunday night, this past Sunday night at 6 p.m. Eastern, when Valerie did the recap, we were still awaiting the outcome of 15. That gave us 52 actionable alerts, of which 7 or 13% would have been stopped out, again based on simple market structure and a simple process we teach all of our passport holders. Now, every logic alert has an entry price and initial target that's designed to help you get your goal for the day. And in many cases, there will be additional targets, and there's always a final trade to target. If it's a long alert, the final trade to target will be the weekly trading zone above. If it's a short alert, the final trade to target will be the weekly trading zone below. Now, the real purpose behind the logic alerts is to help you learn how to read a chart. If you're going to trade for a living, you got to be able to read a chart. When you look at a chart, if it still looks like chaos, then you're not using the logic alerts to help you learn how to read the chart. So, get busy. You can do it. Now, long before we had a Logic 247, years before, we had the CTAs, the concierge trade alerts. Typically, they come out 5 minutes before the Globex open each evening. So the Friday session, which we're in today, started last night at 6 p.m. Eastern. So all of our traders and trial members had all of these targets 5 minutes before the market opened. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. And if you are one of our traders, make sure you read this information up at the top. Make sure you understand it. And if there's anything you don't understand, please ask. All right, here we are at the daily chart of the S&P. And we have a new all-time historic high. We ended up with a doji yesterday. Last night during the members-only workshop, we had a doji, but onward and upwards. What's the new all-time historic high? 64.24 half. See how close we can get. $64.24.75. 64.24 half. One tick off. Can't get much better than that. It's just difficult on the daily chart. So, as we can see, we've been in an uptrend for quite a while since price closed above the BBC. That's the green line, stands for bull bear cross. When price crosses above the green line, we expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. It's pretty simple. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. And the pullback to the BBC, whether you're pulling up from below or pulling down from above, the pullback holds more often than it doesn't. Are we overdue for a pullback? I would say yes. The market just seems to... This party will come to an end, and everybody will be screaming, the sky is falling, it's all over. But I just want you to grasp this. Now, number one, you need to understand that the market always moves in legs. You get a leg and a retracement, 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 a leg and a retracement. Price always reverts to the mean. Okay, but that's way up here at what, 62.99? Yeah, 62.99. You see it right over here. Right there. But the shallowest possible Fibonacci retracement is here. There's the 24% retracement, the 38, the 50. Now, to keep this bull market healthy, we really should see a 50% retracement. Chances are we'll get a 24. Okay, it's going to bring price down to 60.60. That's when everybody will be running around telling you the sky's falling. Now, right in the middle of this 24% retracement and the 38, you've got this area here where we identified early on as potential major support, and it still is. Okay. Question is when does the trip start? Could we see the 100% fib extension first? Anything's possible. You gotta embrace all possibilities. If we do, then the drop is going to be more dramatic and more painful, unless you understand how markets work. Okay? Trees don't grow to the sky, and neither does the market. We've been in a bull run since April 24th. Amidst all the worry of tariffs and, oh my gosh, we don't know what's going to happen, we can't lower interest rates, oh me, oh my. And here we are with another all-time historic high. I mean, 3 days in a row. One. Now, I don't think we had a higher closing high. What do we close at here? 46.5. And then we closed at we closed at 64.05.75. And yesterday we closed at 64.06.5, so a slightly higher closing high. And our high today is 64.24.5. And we're just slightly off the high of the day. Now, I show you the daily chart every day because I want you to always be aware of the big picture. Institutional traders, the ones who actually move price, they look at daily, weekly, and monthly charts. The way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. So I encourage you, spend 2 minutes with the daily chart of whatever you're about to trade. Understand the big picture, take a free look over the shoulder of the deep pockets, see what they're doing, and identify where major areas of support and resistance are. Now that job becomes a little more challenging when you're at all-time historic highs, because when you look left, there's nothing to see. We're in what's called price discovery mode. We will find a stopping point, and I think it'll come before we get to that 100% fib extension. But you never know. But at least you're aware. That's what I'm encouraging. Okay, all alerts are created on the 30-minute chart. The vertical line here separates today, Friday. Here's Thursday, back here's Wednesday. Now, when price rallies up to a weekly trading zone like it did last evening, we expect resistance. When price drops to a weekly trading zone, we expect support, like we had on Wednesday. Then resistance. 70% of the time when price encounters a zone, you're going to get consolidation. 20% of the time, rejection. 10% of the time, the slice. So this is the highest weekly trading zone for this week. Now, based on the last 15 and a half years of history, we first published the weekly trading zones December 14th, 2006. 15 and a half years ago. December 14th of 2009? Yeah, maybe that's it. Okay. Anyways, 15 and a half years. When price moves up to a zone, we're looking for resistance. When it drops to a zone, we're looking for support. This is just a window of opportunity I drew a couple days ago in a mentoring session. Oh, yesterday, I think. Was it yesterday? Maybe. Okay, now, based on 15 and a half years of history, what we expect is at close of business today, price will be at or below the highest weekly zone. Is it possible we could close above it? Yeah, it's possible. It's happened a handful of times over the last 15 and a half years, and the market is poised to move higher. You got the perfect stack. Price, the black step line, blue and climbing, and the BBC. Now this candle, the high is 24.5. This candle is 24.25. So we put in a higher high of 1 tick. That doesn't instill a lot of confidence. Remember, these are 30-minute candles. So we'll see how it plays out. This is where we opened last night. This was the opening candle, and everyone, all of our traders and trial members had these targets 5 minutes before the market opened. We got a leg, we got a retracement. Now, anytime we're above the BBC, we're bullish. When we're below it, we're bearish. So we got a leg and a retracement, and as you can see, the pullback held. This pullback held, this pullback held. Red and falling turned to blue and climbing. We ran right up to the long target. And then we had a very shallow retracement back to the step line. And that's when we ran up and hit the zone, 6421/22. These zones were published Monday morning at 6:15 a.m. Eastern. Once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. So we came back down into this area, okay, and if you look left, you'll see there was quite a bit of support yesterday afternoon in this area. And here you go. Buyers are anxious, so they didn't wait for us to get to that low. Came in a little bit early. The pullback to the BBC held. Resistance sends us to support at blue and climbing. Sends us back to resistance at the BBC. Back to support at blue and climbing. Then we overcome the BBC. And now it looks like we just may be ready to take out that high. We have. That's right, by 1 tick. Let's see how much further they can push it. All right, the Dow, here's where we opened last night. Ran up, hit the weekly trading zone, which we expect to be resistance until proven otherwise. Then price gets below the BBC. We drop down and hit the short target to the tick. Well, actually, we spiked it a little bit. But the short target, if you look over here, this low from Wednesday, look at the horizontal line on my cursor. You can see that that is clearly the short target. That's exactly where the market found support, which bounced us. We already found resistance, then we found support. So now we're looking for resistance. We're above the BBC. We got blue and climbing below us. Question is will price stop at the zone? Or will it take us up to this high? Or possibly even the long target? Got to clear this zone first. The Russell, here's where we opened. Pulled up to the BBC, pulled back hill, dropped us down to the zone where we consolidated, as we do 70% of the time. And then we got a drop in line with these lows from yesterday afternoon. Sent us back up to the zone. We spiked it a little bit. Now you had a bearish cross right here. When you have that's when the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. And it was. We spiked it on these two candles, but on this candle right here, we're basically right at the bearish cross. And that sent price all the way down to the short target and to the zone below where we consolidated. Support sends the market looking for resistance. Now, we got 4 minutes left in the life of this candle. The pullback holds more often than not, but eventually it'll trade through. If it does trade through, keep in mind you've got a bearish cross right here at about 22.68, and then you got the weekly zone at 70.71, and you've got 72, and then you got 74. And then overnight, that resistance is at 75. The NQ, we opened right above the weekly zone and the BBC. Pullback hill sent us up to slightly take out these highs from yesterday. If you look right here where blue turned to red, you can see that's these highs right here. See that? Okay. So resistance sends us looking for support. We consolidate at the zone, the pullback to the BBC holds, and then we go down and we touch the short target. It's this little area right here. Support sends us to resistance. So first we hit the short target. Now we've hit the long target on the NQ. Now, we've had 2 pretty flat days for the NQ. Now, inside a 30-minute candle, an awful lot happens. So, but the bigger picture, it's pretty sedate. Although it looks like it wants to wake up here. This is the highest weekly trading zone for the NQ, up at 23,624/25. Question is are we going to keep climbing? Or are we going to retrace to the BBC now that we found resistance? We are printing a red candle. The step line could be support. Blue and climbing could be support. The BBC, we expect that to be support until proven otherwise. Crude oil. Here's where we opened last night. Pull back to the BBC held. Support sent us to resistance at the weekly trading zone. Resistance sent us back to support at the BBC. Pullback held. And then off we go to the long target. We spike it a little bit. If we scrunch it up, okay, we had a bearish cross way back over here. Okay, that's what that long target is based off of. You see that? See where the red line got below the green line? Right there. That's the long target. So we hit it and spiked it. Then we hit it again and hit it again. At that point, price drops back to the BBC. Then we make another run. It's really powerful. The bearish cross, the bullish cross. Like down here, we've got a bullish cross. Now, price was dropping pretty good as it approached this bullish cross. It didn't quite get there yet, but we're printing a red candle. If it does get down here, say 65.15, expect that to be good support, at least good enough for a bounce. Also, the step line is starting to hook to the right. When the black step line crosses red and falling, we expect a retracement back to the BBC. We'll see if that unfolds. Gold. This is where we opened last night. We attempted higher, but we couldn't get above the highs of yesterday. This was the high of yesterday at the zone. The low of yesterday was at the zone. Again, these are the zones that were published Monday morning at 6:15 a.m. Eastern. This is why it's so important. Once the zones are published Monday morning, get them on your chart before Wall Street wakes up for the week. So then we find support at the zone, resistance at the zone, support at the zone, and then resistance at these highs. That sends us down. We trade through the zone. We find support at the short target. We consolidate there for a couple hours, 2.5. Then we finally break below and we find support at the next zone, right here, where again we consolidate. Now, the retracement didn't have enough strength to get all the way back to the VVC. That's a sign of weakness. And now we're down at the zone below, 33.25/26. And the low of this candle was 25.5. So right in the middle of the zone. The zone's 25/26, and the low here is 25.5. Again, that's a good reason to get the zones on your chart before the market opens, before Wall Street opens Monday morning. That's why I send them out at 6:15 a.m. Eastern. All right, we still got silver, but we'll cover that when I come back. Rough day for silver. We had a $5,000 per contract drop based off yesterday's close. But we'll talk about that in a bit. And Michael's going to give us a recap of what happened in the live training room this morning. Then do a little live trading on the TradingView platform. Then we'll look at silver and wrap things up with our good word for the day. Okay, looks good.
All right, here we go. Yeah, look at this, Dwayne. Once we got up above everything here, right here, we closed on the 17th. We closed up above the MA1 or the red and falling.
Right.
It just stayed there. It just accelerated.
Yeah. I'm wondering what it's going to take to turn this market around.
I don't know.
I mean, we know it's not going to go up forever. That's just not how markets work.
No, it's going to come down eventually, but that BBC keeps rising and rising and rising.
It does. It just keeps chasing price. And that is, we're overdue for a retracement. Now,
we are.
Now, well, you've already got the charts, but the 24% retracement, I gave everybody the number earlier. I forget what I said. But when I take the charts back later, I'll show you what I've got.
Okay.
Because the 24% retracement, it's down around, it's way down there. I mean, you won't see it on, well, if you go to that low.
Crunch it up like this and go to the low way over here.
Yep. Yeah, if
all
you
the way
draw
up to here, the
from there.
24% retracement is probably going to be over here somewhere, right?
Yeah, I just can't remember what number I gave him.
Well, hang on, let me crunch it up so I can actually see the bottom.
There you go.
Right there. Okay, so we can draw it from this line right here, which is the bottom. And I have my retracement. Oh, I don't have the 24 on that. Let me choose. I don't have the 24 anymore. Just choose this anyway. You'll see it's going to be half of the 50. So if the 50 is right here, that's the 50. So the 24 is going to be right about here. That makes sense. You got some support right there.
Yep. And that's when, it's right where we had that candle that poked below the VVC.
Yep,
that's right. The 24% retracement's in that area. So.
Yep, right in here.
And of course, that will, all the talking heads will be screaming about the skies falling, and that's just the shallowest retracement. People should really consider the fact that price, it's due for a 50% retracement.
Right, be down here somewhere.
And that's just a sign of a healthy market.
It is. It is. I mean, if you draw it again, the 50% is that's all I have. Is I have the 0, the 1, and the 50. So this is 50 right here.
And what price is that?
50 puts you down here. 50, 56.5.
So we're talking about a drop of what, 800 points to the 50% retracement.
Just almost 900, 875 right now.
Yeah.
Yep. Be a big
Well,
move down.
good times ahead.
The sky will be falling. All the talking heads will be Trump's awful, and the economy's going to die, and the markets are worse than they've ever been, and yeah, all that.
all that jazz.
Look at the head and shoulder pattern, right? The inverted head and shoulder pattern.
And Mr. Jazz Hands, he'll be out there.
Yep. Yeah.
He'll be the biggest cheerleader because that's their grandest dream right now is that the economy will crash and go into a recession. Some of them have actually come out and said it. Most of them are thinking it. So anyway, I'll hit mute so you can go to work.
All right, here we go. All right, so good afternoon, everyone. Today is Friday, the 25th day of July, 2025. Now, if you have not taken a free trial, let's go here to mytradingIQ.com. Click on the purple button right here. There's no credit card required for the trial. Just click on that purple button, and it's going to bring you to this registration page. Not this page. Sorry, let me refresh on this. It'll bring you to not that registration page. Hang on. Let me actually click the link. Bring you to this registration page. There we go. Bring you to this registration page where all we ask for is your name, your email, and your phone number. Down at the bottom, if you click on this right here, it gives you TradingView login ID. Hit register, and then we'll be able to get your indicators indicating on your charts for you. Okay, get them indicating on your charts for you. Now, spreadsheet. We didn't have a great day today. It started off really good, but then it got pretty bad pretty quick, and then we recovered in the last hour or so. But we ended today on the NQ plus 62 ticks, on the Russell plus 2, on the gold minus 18, on the ES plus 15. So the ES, we ended at the high of the day. The Russell, we ended at the high of the day. The gold, we were pretty close to the high of the day. With the minus 18, we were pretty close to the high of the day. The high of the day on gold was minus 14. Actually, no, it was 1. It was plus 1. And then it was minus 14. So the NQ, the high of the day on the NQ, we were up as far as 142 at one point, and then we gave it all back, 4 stop outs in a row. Oh, well, it is what it is. If we would have quit trading when we got the goal for the day, we would have quit trading after 3 minutes and 1 trade. We're at $1,050. Took another 22 trades, 22 more trades. I mean, we did triple where we were at from there, but it took 22 trades to do it. Anyway, on the month, we're at $14,567 over 18 trading days, averaging $809 per contract per 2-hour trading day. Now, if we carry out the $809 per day, it'll be under $2,400 added onto this total, so that will get us above the lowest month of the year, which was last month. Now, it should get us almost to 16,000 by the end of the month. That's 4 days next week. We should be above 16,000 by the end of the month. Again, that's with one contract, right? We like to maintain the average over $800 per session. Last month we had 833. I'd like to improve on that if we can. Last month was June. We actually had fewer days last month because I took a couple days off in here. I thought, didn't I? Was that last month? 2nd, 3rd, 4th, 5th, 6th, 7th, 8th, 9th. It looks like I took off maybe the 6th, 8th, and 9th or something like that. I don't remember what it was, but it turned out to be like a week for me. Week in a row that I was able to go somewhere. But I don't think it was the whole week from Monday to Friday. Anyway, that may be coming up in August. So we'll have to talk about that. But this is where we are. If you were to quit trading when you get the goal for the day, did I do this part? We're at $170,032, averaging $1,338 per day over 127 days. Now for the 24/20 blueprint, if you were to quit trading when you get the goal for the day, and you were to add 1 contract per month, so far this year you would have had to work 15.8 hours. You would have profited $81,102, and you would have averaged $5,133 per hour so far. Gross numbers, right? Net numbers, if you have my rate, you would have traded 1,207 round trips. You net would be $78,085, or average net would be $4,942 per hour. either way, those are all good numbers. All right, let's get into what we did. So most of our trades are on the NQ. I'll just go left to right. We had a bunch of trades on gold, but let's just start out there. Okay. Now, yesterday, when I was in here yesterday, I had said to you guys, those of you that were in here yesterday, that I was going to create this thing that would show you the color of the YBR. If you're above the YBR, green. If you're below the YBR, red. I did create that, and I stuck it in the context, just like I said I would. You guys might not be able to see that too well in there because I really turned it down quite a bit. But if I turn it up, you see I color coded it for you. So when you're above the YBR, it's that color. When you're below the YBR, it's that color. I did that because yesterday I did this so I could just show you the way you should be looking at this, right? The way you should be looking at it when you break it down like this. If it's green, you start paying attention when it gets into the oversold, right? When this is green, you start paying attention when this happens right here. Pay attention there and here and here. And when it's red, you pay attention here. And because this didn't make it into the overbought, you'd skip that one and you skip that one. Then you pay attention to here. Okay, right there. It's got to make it from the oversold. It's going to do the full cycle before you take another trade in that direction. Okay. So just looking at it like this, you can see what you would have had to do. Like over here, you would have skipped everything all the way over to here. Okay, and then in here, it has to go into the overbought and come back out of the overbought to get another trade. But you see how this could be helpful, right? Could be helpful. So you don't even have to look at price to know where you're going to start thinking about it. Then if you bring price down, you just have to see where you are with respect to the midpoint. Did you have a trade? No. This one right here, it hit the midpoint and closed up, so that would have been a trade right there. I did take that. I got some profit on that. On gold, that was our first trade on gold. We got one tick on that one. This one right here didn't turn into a trade. Okay, this one right here didn't turn into a trade. This one right here didn't turn into a trade. I didn't mark this one, but I shouldn't have done that one, I don't think. Should I? I did mark that one. I'm sorry, I didn't mark that one. Yeah, okay, that would have been okay because it went all the way up into the overbought and then came all the way back down to the oversold. So it did do the full cycle. But this one stopped me out anyway. So I went from +1 to -14. And then this didn't turn into a trade. And so as you go through them all, we here on the gold went from 14. This was a mistake. I should have had my stop at break even. So right there, I went from -14 to -29. Then I went from -29 to -28. I got one tick there. Then I had a break even, and then 5 ticks there. Got to -23. And then there's another one in here that got me from -23 to -18. So I had another 5 tick trade. So I had a 5 tick from -28 to -23, another 5 tick from -23 to -18. And that's where I ended it. But if you go through this without even looking at price, you can tell what you should be doing, right? When it's red, you're paying attention when it gets into the overbought. Okay. When it's red, you focus on that. Right? When it's green, when it's red, you focus on that. And it's got to make the full cycle. It's got to go from overbought down to oversold, then back up to overbought, and down to oversold. So these are all places where you should pay attention. That doesn't mean they're all trades, but it's where you should start looking for a trade. When it's green, it'd be right there. Okay. So if I bring this back down, you can see, did this turn into a trade? Yes, it did. Nice trade right there. Did this turn into a trade? No. Did this turn into a trade? No. Did this turn into a trade? Yes, it did. Right there. That was a nice trade. Did this turn into a trade? No. Did this turn into a trade? Yes, it did. That was a nice trade right there. See, so out of these 1, 2, 3, 4, 5, 6, I think 3 of them turned into really nice trades, and the other ones were just no trade at all. Do you see that? This one did, because it was in the overbought. The next bar hit the midpoint and closed down. This one didn't, because when it closed down way over here, got out of the overbought, it never touched the midpoint. This one didn't, because when it came out, this one was, I'm sorry. No, this one wasn't. I'm sorry, this one wasn't, because the midpoint was not stable when it closed down below it. Right, you might have taken that, but I like to see the midpoint be flat for a bar, at least a bar. A little flatness to the left of it before you take it. This one was going up. The midpoint came up to meet the bottom of that. But this one right here, this was a good one. You see the midpoint was flat and it closed right on it, right below it. So that was good. Then it flipped up right here. So it hit the midpoint right here and closed up above it when it came out of the oversold. See, easy and obvious trades. That's all you have to do is wait for those. They happen often enough that if you just wait for those to come along, you should be okay. This one right here, it came off the overbought right here. I'm sorry, oversold right there. The midpoint and the oversold, that was a good one. Nothing there, nothing there. This one doesn't look like it hit the midpoint, I don't think. No, it didn't hit the midpoint, so that wouldn't have been anything I would have done. And that's it. That's all you have to do, right? So if you, the context, let me show you how this works, right? It's inside the TIQ context. Refresh your charts. Start out by refreshing your charts, right? I'll hit save on this. So the first thing you have to do is refresh your charts. So it pulls in the latest stuff in the background. All right. Now, if you have a context on your chart, it's going to have a little purple circle on it. If you click on that circle, you'll have the option to update on all charts. Click on that, right? On any one of them. It'll have a little purple circle. Click on that, right? Then inside the TIQ context, under inputs, this is the switch right here to turn it on. See, that turns it on and off. And you can't see it so much with that one, but this one over here, this one's got darker colors, so you'll be able to see it better with this one. I made them darker. See, that's the switch. Turns it on and off. You can go in here under style, and right here, you can also flip the colors on and off here. But if this one is not on, then this one isn't going to make a difference, right? So you got to have that one on, and then come in here and use this. You can change the colors around in here if you want to. You can make them darker, lighter, or you can make them different colors altogether. You don't have to have the YBR on. See, what this shows you is when you're above the YBR or below the YBR. It's green when you're above, when price is above, and it's red when price is below. But you don't have to have the YBR on at all. You can shut the YBR off and still have the colors without the YBR, okay? I talked about this yesterday when I was in this session yesterday. I said I was going to do that and try to get it done for the partners meeting last night, and I did get it done right after this meeting yesterday. So 24 hours ago, I did that. All right, the Russell. We did not have a lot on the Russell today. As a matter of fact, I only see one out of the two trades that we did have, and one of the trades was a +1, and the other trade, oh, it's probably over here. Oh, we had 3 trades. Okay. So one of the trades was a +1, then we had a break even, and the other trade was a +1. So we ended up with +2 on the Russell. That was our high of the day, +2. I don't feel like I missed a lot of trades on the Russell today. I must have, I think. But yes, there was one right here that I missed. It would have been a break even. One right here that I missed. It would have been a nice trade. One right there that I missed. It would have been break even. One right here that I got for 1 tick. And that was it. During the rest of the session, it looks like there was one more right here that looks like it would have been break even. If that hit the midpoint, that would have been a trade right there. Probably another break even. I don't think I would have done that. There. Yeah, I probably, okay, I would have done that. That would have been some profit on that. I would have done that. I would have done this. That would have been profit. And this right here would have been some profit. And that was it on the Russell. Not a lot of opportunities today. The ES, we're on the ES, +15. Okay. These are all our trades on the ES. The first one was a +4. The next one was a +5 to get us to 9. And the one after that was a +6 to get us to 15. And that was it. And this is the whole day on ES. I don't feel like I missed a lot here on ES today. It just didn't give a lot of opportunity. This right here could have been a trade, but this was at the end of the session. I actually did take that. I did take that. I took 4 ticks, but I didn't count it. This was at the end of the session. And that was it. You guys may remember from the morning session, I did have that one on, but I didn't count it. And that was it for the ES. Now the NQ. I'm going to do this and back. NQ, get back to the beginning of it all. So on the NQ, we started off really strong. On the NQ, our first trade, we picked up 24 ticks on the first trade. Is that right? 1,050, we picked up 22 ticks, 21 ticks on the first trade. 21 ticks is what we got on the first trade. Sorry. And then right after that, we picked up 45 to get us to 66, and another something to get us up to 90. I think it was 34 to get us up to 90. Then some other big number to get us up to 118. Then another big number to get us up to 142. And then the stop out started. We stopped out there, went from 142 down to 117. Then this was a mistake. I should have my stop at break even. And from 117 down to 98. Then from 98 down to 73, sorry. And then from 73 down to 42. So 4 in a row right there. That was tough to take. And they were all good trades, every one of them. They were all good trades, easy and obvious trades. This one I definitely should have my stop at break even. But they were all the easy and obvious trades. The close was on or above the midpoint, below the midpoint when it should be. I did everything right on every one of those. Anyway, we followed up and we got 4 ticks there to get us to 52, then 4 more ticks here to get us to 56, then 4 more ticks here to get us to 60, and then 4 more ticks here to get 2 more ticks here to get us to 62. And that was it. So every one of these trades did pretty well. All right, this last one did the best out of the 4 of them, but I ended up with just 62. And so during the break, yeah, let's do it this way, right? And you have green, you don't start paying attention until it gets into the oversold, right? That's where you focus right there. That's where you focus. Now, not here because this didn't make it into the overbought. Right there is one. Then in the other direction, right there is one. And then another one. Then right there. Didn't make it into the oversold. So now you're down here and you're thinking long from here. And again from here. And again from here. And here. And skip all those because none of them made it into the overbought until here. Then you get it one more time right here. And then you go in the other direction. Because it's red. So you're right there, and that's it, I think. That's it. So that's really all you have to do, right? Then you look at price. Did we have a trade? This was a good trade right here. You could have taken that one. This one right here, it did turn into a trade. That would have been a stop out right there. So we had a nice trade there, a stop out there. This one did not turn into a trade. 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 Now, the reason it's not a trade is because the up close was below the midpoint. The up close never touched the midpoint. Never got the down close. Down close, we never got the down close there. So none of those were trades for those reasons, right? This one over here, where it came out of the oversold, nowhere near the midpoint. This one over here, where it came out of the oversold, nowhere near the midpoint. This one right here, where it came out of the oversold, right there, nowhere near the midpoint. This one right here, and didn't actually hit the midpoint. Okay, so the way it's got to work right now, if we get an up close on this bar, then the down close of the next bar would be a trade. So we just got into the overbought. Now you got to pay attention to price. Where is it with regard to the midpoint? Do you see that? It's really simple. So you see the top of the bar is right there, 47. So the bottom of the bar has to be above the midpoint. And the bottom of the bar is going to be right here at 42. So that's not going to be a trade. Because the down close is going to be above the midpoint. It's not going to be a trade. All right. So I haven't taken a single trade yet because we haven't had a single trade yet. I did talk through a whole bunch of things. Does anybody have any questions about any of this stuff? How to turn this on, how to use this, if you want to use it. I mean, you don't have to use it at all. The YBR does the same thing. It's just, I might make this color flow down into the bottom here. And when the trigger right now, I have the TV trades colors can flow down to the bottom. Do that. And then whatever's going on up here will match down here. I might be able to do that for this too. I can follow that model, maybe flow this down to the bottom so you can look down here without even looking up here to see what the color is. Or if you don't want colors up there, you can just have the color down here and say, okay, it's blue. Or it'd be green. It'd be green, overbought. I need to pay attention. Like right here. I'll actually be oversold where you have to pay attention. Not overbought. But consideration. Maybe I'll do that over the weekend. We'll see. See how I feel about that. All right. 126.5. So we have 3.5 minutes. We might get a trade. The Russell's pretty close, all right? You're in the overbought. You need a down close on this bar, and the next bar after that is going to give a down close. It hits midpoint, so an up close after that. So you're 2 bars away on the Russell. Over here on the gold, you're a long way away because you're here at this point. So down close on this is just going to get you, it's going to get you in the oversold. It'll be right there. Then another down close is going to go flat in the oversold, and the one after that could be a trade. You could hit the midpoint, give you an up close. Okay, so that's what you have going on there. All right, I lost a DOM. Hold on, I'm missing my NQ DOM. NQ. Yes. Okay, so it doesn't look like we're going to end up with a trade here. We have 1.5 minutes left, and a lot of things have to happen to make a trade. We're going to get several bars on either one. I don't see any questions in here, but we'll wait it out. If you haven't taken a free trial, I'll go through this one more time. Go to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Click on the purple button, bring you to the registration page, just fill it out. Right. You fill it out, you get access to the room in the morning, you get access to the software. That's all you have to do. All right. All right, so we're at the midpoint here on the NQ. Now, this down close right here is nothing, right? What it needs to do now that it's come out of the midpoint, it needs to get down to the oversold and come back up into the overbought and then get out of the overbought again. All right. So that's what I'm talking. You're not going to have anything. The several bars need to form on every one of these markets to turn into a trade. It's a sleepy last Friday of July afternoon. seems like. All right. Well, it's time, guys. It is 13:30. We didn't have a single trade in this session. But I did show you how to use the context to add that new stuff to the context if you want to. Of course, you don't have to, but you can. And yeah, and that's it. If you want to take the free trial, go to mytradingiq.com, click on the purple button, upgrade a card, fill out the registration. All right, and that is it. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready. He is always right there, ready to go.
I'm ready. Recap of the morning session.
Today it took 3 minutes and one trade to get to $1,050 with 10 contracts.
Good job.
There, you got that bill tuned up. I can tell.
All right, guys. We made it all the way to silver. We covered all the other markets. If you missed it, an hour after I sign off, you can go to youtube.com/CFRN and watch the entire broadcast in its entirety. This is a $5,000 drop plus in silver today per contract traded. We opened right here last night above the BBC, so we're expecting higher prices, and we ran right up to the long target, which, as you can see, is based off this high right here. And we pulled back into black step line and blue and climbing. That sent us a little bit higher. Okay, this area right here with the black step line crossed red and falling, that's an important price, important area, and price didn't quite get up to that inflection point. It had 3 attempts, and the highest attempt was right there, which pretty much lines up with this high right here. What was that high? 39.50. What was this high? 39.52. Took it out by 2 pennies. It only takes 2 pennies to get your goal for the day with silver. So resistance will always send the market looking for support. Now the pullback holds more often than not, like it did here and here and here and here and here and here and here, and then coming from the other side here. Then we finally traded through, and we know eventually it's going to trade through. So we get a leg down, this low right here, just right here. Okay, so that bounces us back up to resistance at the BBC. The pullback holds, so down we go. This time we hit the short target, which is based off that low right there. Traded through it, pull back to red and falling, pull back held. That sent us all the way down to the zone at 38.93/94. Support bounced us up to resistance at the BBC. The pullback held, and then down we go, and go, and go, and go. And where did the market finally find support? Now remember, earlier in the week, both gold and silver were trading above the highest weekly trading zone. But I said by close of business on Friday, we expect them to be below the highest weekly trading zone. And we are substantially lower. In fact, on silver, there's only one more zone left below. So we found support at the zone, 38.11/12. Now we've overcome red and falling, and look at the step line, how it's starting to hook to the right. As that thing crosses red and falling, expect a retracement. Now you've got a zone here where you could find resistance, a zone here where you could find resistance. The BBC, we definitely expect resistance. Like this, like this. Should see it again. That's if there's enough buying interest to push price up there. At this point, there may not be, but I would think there's enough institutional traders out there that would see this as the buying opportunity that it is. All right. This zone was published Monday morning, 6:15 a.m. Eastern. Today's Friday. Still doing its job. That's a big drop. And a big drop. Now, last week when we had the huge rally, I said, all right, now this is going to create a huge sell-off. And it has. And I think this sell-off will, in turn, create a huge rally. So be prepared for higher prices Sunday night or Monday session. There's a lot of reasons, both technical and fundamental, for silver to move higher. We're technical traders, but sometimes the fundamentals are just so big it's hard to ignore them because they're everywhere you look. And do we have a new high? What do we got? 28.75. Yep, 4 points higher than when we started the broadcast. All right, 28. It's good enough. Now, the 100% fib extension is up at 65.85. And that 24% retracement that Michael and I were talking about earlier is now at 60.62. That's the shallowest possible retracement from this point. That means price dropping from 64.27 down to 60.62. It's almost a 400-point drop, a little less. But if we keep moving higher, we'll see. We'll see where we are when we open Sunday night. And I want to see if traders carry these long positions over the weekend. A lot of them may choose to unwind headed into the weekend. Now, Trump's in Scotland playing golf, but he can put out a tweet or a Truth Social post from anywhere on the planet. 28.75. New all-time historic high. This was a new all-time historic high and closing high. This was a new all-time historic closing high by a tick. And now, unless we sell off, we'll have a third all-time historic closing high in a row. This won't go on forever, just like this sell-off over here. Eventually came to an end. Now, prices drop faster than they rise because it takes financial commitment for price to rise. But for price to fall, all that's required is the institutional traders hit pause on the buy side and price just naturally deteriorates. Of course, then, once it becomes obvious that's what the buyers have done, those institutions that focus or specialize on short selling, they come out of the woodwork and they can drive that thing down fast. I mean, look at the size of these candles on the way up compared to some of these candles on the way down. This day here, though, that was a pretty good indication that things might be about to turn around. But that's a whole lot of buying interest. But what happened? We got a leg, we got a retracement, the pullback, the blue and climbing held, and then 2 days later we're back above the BBC and we began this climb. So the slide happened very quickly, whereas the climb has taken substantially longer. And that's just how markets work. To become a member, send an email to support@cfrn.net. Let Valerie know you want to become a member. She'll send you an email that explains everything you get when you become a passport holder. And she'll include a link for you to click so you can make your payment and make it official. You get 2 hours of live training every trading day in an interactive environment. On top of the 2 hours of live training every day, you get private one-on-one mentoring. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs, it doesn't matter. Price flow is the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's simply how markets work. As a passport holder, you get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published each evening. Last night, as most nights, 5 minutes before the market opened. On Monday morning, you'll get the weekly trading zones delivered in the weekly trading zone channel in Telegram. Get them on your chart before Wall Street wakes up for the week. Once the zones are published, Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They don't change in any way whatsoever. And every Thursday afternoon, you'll get an invitation to attend the members-only workshop Thursday night at 8 p.m. Eastern. And last but not least, you get the golden key that opens all the private channels in Telegram. The workshop channel, the Logic 247 channel. Now, when you're on the trial, you have access to the trial channels. So you'll still get the alerts, both the Logic, the concierge. You'll get the weekly trading zones. You'll have access to the trial discussion group, which allows you to communicate with our members who have their own members-only discussion group. But you can ask them questions. In fact, we encourage that. We want you to know exactly what you're getting yourself into. Everything a trader needs, all under one roof, and that's important. One low price, that's important too. I know many of you have spent a lot of time and a lot of treasure to get to this point. If you're still chasing that holy grail, it promises you'll never get stopped out again. Please stop. It doesn't exist. It cannot exist. It defies the laws of physics and science and so many other things. The only secret to trading is finding someone who's willing to teach you how to trade. And guess what? You found it. CFRN, Christian Financial Radio Network. Sensed. Okay, good word for the day and for the week. When God asks you to give. I'm not talking about when the preacher asks you to give. I'm talking about when God asks you to give. Ephesians 6:8. The Lord will reward each one for whatever good they do. When God asks you to sacrifice on behalf of somebody else, do it. It's like putting money in a heavenly account. You may not need it today or tomorrow, but when you do, God will ensure it comes back to you in a multiplied form. Indian Christian missionary Sidhu Sundar Singh and a companion were traveling through a pass high in the Himalayas when they found a body lying in the snow. They checked for vital signs and discovered the man was actually still alive, just barely. He had a broken leg and could not walk. As Sundar prepared to stop and help this unfortunate traveler, his companion objected, saying, "We shall lose our lives if we burden ourselves with him." Sundar, however, couldn't comprehend leaving the man to die in the snow without an attempt at rescue. His companion bade him farewell and just kept walking. Sundar lifted the traveler on his back and with great exertion, made greater by the high altitude and snowy conditions, carried him onwards. As he walked, the heat from his body began to warm the frozen man, and also kept Sundar's body warm. Before long, they came upon another traveler's body lying in the snow, and on closer inspection, they discovered he was dead. You guessed it, it was Sundar's original traveling companion. So what's the lesson in all this? What you make happen for others, God will make happen for you. The Bible says, serve wholeheartedly, as if you were serving the Lord, not people, because you know the Lord will reward each one for whatever good they do. That's our good word for today and for the week. Holiday next Friday, so we open Sunday night, 6 p.m. Eastern. That's when the concierge trade alerts come out, typically 5 minutes ahead of the open. That's when the Logic 247 alerts start flowing. The live training room opens Monday morning, 9:25 a.m. Eastern. And we never really close. You can always reach us by email, by phone, but the best way is Telegram. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.